Everybody on the channel that has been watching my videos knows how much of a bull I am on Starbucks Corporation. And for all, I am the self-proclaimed Starbucks cult leader. And also, if you guys have been paying attention to my buys and sells recently, I have not been doing anything to Starbucks. Which I made it clear on this company in the past of how much I love it and how much I love some of the characteristics that it has. But I do think right now there are a lot of things that they can clean up on and what I would want to see as a shareholder going forward. So today, in my second ever video in the series, I will be stepping in as the Starbucks CEO. I'm going to share everything that I would do from a strategy to make Starbucks once again a dominant player in the restaurant industry. I feel like right now Starbucks is on thin ice with a lot of things. And as somebody who holds this as their second largest holding in their portfolio, I don't want to be on thin ice with this company. I've stated in the past that if it got to a certain price, I would absolutely look to trim. This is a highly requested video that has been in the process of making for a very long time. I don't want to mess anything up here, so if you appreciate that, all I ask is you smash the like button and share the video with a friend. With all that out of the way, let's get into the video.
Hello, I like money.
So if you guys have been subscribed to the channel, you would know that I have been covering Starbucks, the company, the stock, intensively for the last 4 years of the channel. As I mentioned, it's the second largest holding in the portfolio. The channel is literally branded around the company, so I want to see it doing well. But recently, I have not been feeling the same way about Starbucks as I have in the past. I feel there are a lot more sure opportunities in the market as I've developed my investing mindset towards more an ETF approach to like SHG and SPY. There's a lot of attractive things about Starbucks, don't get me wrong, but I think there's a lot left on the plate. And look, I make fun of people who bring up the 5-year chart on companies, but this company's just been underperforming in general over the last 5 years. You gotta look at the opportunity cost here. It definitely depends when you bought in as well. Like, I have a good return on the company right now, but for such an iconic brand, I think the expectations are a lot higher. Currently, the valuation is one of the most unattractive things about Starbucks. They currently are trading at a trailing PE of 27.97 and a forward PE of around 28.9, which is crazy because you can get Google for a cheaper valuation for a lot more reliable and rapid growth. I understand there's always going to be a premium around Starbucks, but for what they're putting out right now, I think that's a bit of a lofty valuation. I understand that Brian Niccol is going to come in and probably change some things with the company, which I'm very happy about, but still, I don't want to pay a 29p for a company that's struggling to get some growth. I want to discuss Starbucks' business model for those who aren't really familiar with it. Nice thing with Starbucks is that it's a very easy to understand business model. They sell food and drinks, that's pretty much it. There's a bit of a deeper lore that I'll definitely go into. Currently, 60.5% of Starbucks' sales are made up of beverages. These are very high profitable items that people are addicted to. Starbucks' food, which is a bit of a joke, makes up 18.7% of revenue as well. I'll definitely be discussing that when it comes to what I change around the business. And other products make up 20.9%. Other products for Starbucks is like the creamer, the K-cups you can buy, hot cocoa, stuff you can take home, the coffee bean blends. One of the biggest issues with Starbucks is how saturated and how big they are, and when you're looking for future growth, that's not something that's really ideal. Starbucks currently has over 38,000 stores worldwide. I laughed there because that's an absolutely insane amount of numbers. Now, this giant scale works for and against them. I would say that it works for them and that they have more money and capital to kind of invest into technology and eat up smaller competitors. But as I mentioned, just having that kind of a large amount of business, you're going to be the target of a lot of political attacks, as I'm going to talk about, and you're also going to not have as much room to grow in the future. Starbucks has pretty much maxed out their potential in the United States. There's obviously a few more local regions that aren't going to have a crazy impact on their revenue or growth going forward. The crazy impacts are the emerging markets they're going to look to invest in. Markets like China, that's the biggest one that they're really betting on in the future. If you're afraid of China investing, this is not the company for you. India is also another interesting market for them, along with Africa. They also have Starbucks Reserve Roasteries, which there's about like 6 or 7 around the world. Off the top of my head, I went to the one in Chicago over the summer. It was packed. It was very, very nice. Very, very expensive. That doesn't make up a huge part of the revenue. It's only about $38 million from what I could find. But still, rich people and white women on TikTok are absolutely going to eat that up. Guess in the comments section how much a medium coffee was from this place. Generally, for those who don't know, the general Starbucks store environment, it's very clean, friendly, welcoming, smells good in there, good aroma, good presence. It's a nice place to be at. The biggest joke kind of around the company is how expensive it actually is, which I mean you could view in a good and a bad way. More recently, I would view it in a bad way because how their numbers are. Next, though, I think it will be fair to cover Starbucks' strengths and weaknesses, and we're going to start off with the strengths. To start off, Starbucks is always going to have demand just because of the nature of their business. Starbucks' menu is very reoccurring, as in people can go to Starbucks every single day. Whereas with McDonald's, I don't know about you guys personally, but I can't go there every day. Maybe every week if I'm really hungry. But Starbucks' business is very unique in the sense that people can come back there every single day because they're addicted to the products, number one, Caffeine is the biggest drug in the entire world, and it's going to stay that way. People are just straight up addicted to caffeine and Starbucks' product, and they're going to be willing to pay a premium for it. But you have to ask yourself at one point, what kind of a premium can you get away with? The first strength of Starbucks is demand, and leading into the next one, Starbucks has reoccurring revenue, both short and long term. You may be asking, how do they have short-term reoccurring revenue? Well, people are addicted to the products, as I mentioned. People are going to come back every day. They have their core customer base. The average person goes to Starbucks 6 times a month. So you have your short-term reoccurring revenue. As I mentioned, the products are very addicting. You can get people hooked on sugar and caffeine. But what do I mean by long-term reoccurring revenue? Starbucks has seasonal drinks. Now, you may just remember the holiday drinks they have. They also have the pumpkin spice drinks during the fall, and they have the lavender drinks during the spring, which they've been seeing really good success with, especially last spring. A lot of Starbucks' core customer base is just straight up addicted and emotionally attached to these products. They are going to spend whatever to get their hands on it, and they're going to make the most of the time that it's available. This is just a reoccurring cash machine for Starbucks. I just can't put it in any other terms. That's one of their biggest strengths. While this is one of the biggest strengths, I think Starbucks can still capitalize more on it, which I'm going to cover in what I would revision as a CEO. Starbucks also undoubtedly has a moat around the coffee market, both small and large corporations. They do have an unfair competitive advantage. Starbucks also has massive scale as well. It's very easy for them to build new stores compared to smaller coffee shops. They can even eat out some smaller coffee shops as well. If your wife wants to open a small coffee shop in town that's right down the street from Starbucks, she's not going to have a great time trying to run that business. Going from scale into the brand power and the value that Starbucks has, this is undoubtedly one of the biggest strengths for Starbucks. People around the world familiarize a certain emotion with the Starbucks brand and logo. They know what they're buying whenever they go to Starbucks. They know the experience. It's one of the biggest strengths that they have. A lot of people are just going to choose Starbucks over random, Jane Doe coffee shop on the side of the road simply because they know the Starbucks brand, they know the drinks they like. 94% of people that go to restaurants in the United States know the Starbucks brand. It just makes it incredibly easier for Starbucks to try a new venture or try something new, try to add growth into their business compared to somebody who doesn't have the brand of Starbucks. Starbucks also does have pricing power in their business, but I put a question mark next to it because I believe they maxed it out. I can go on for days talking about Starbucks' pricing power, but you saw it really in effect during 2022 when inflation was kind of at a peak. But yeah, absolutely a question mark there. I don't think they can really use it anymore, so I wouldn't take that with a grain of salt. And then lastly, employee benefits. Starbucks treats its baristas very well for the kind of work they do. Often they have a lot of high school and college kids working at the stores. Ideally you don't want to grow up and be a Starbucks barista and expect $48 an hour. I recently made a Starbucks union video debunked, and I just completely ransacked the entire case that the unions have. And I'm going to actually do something when I step in as CEO here in just a bit to kind of counter their actions. For all the great qualities and strengths that the Starbucks business model has, it's very disappointing with the returns that they've had recently. Now, something that's been more focused on recently by a lot of investors, these are the weaknesses in my opinion for Starbucks. To start off, the biggest weakness is saturation. At this point, if you're looking for growth in Starbucks, I think it's a little more difficult to find than maybe some smaller cap stocks you're looking for or some tech stock. If you're looking to buy an investment and you're like me, you want outperformance from the S&P 500, and Starbucks is in a tough position to do that. Best way to beat the S&P 500 and get returns is by growing cash flows, and that's going to be harder to do when you're saturated as Starbucks. Now, Starbucks is extremely saturated in North America, which is, in my opinion, one of the most reliable markets for Starbucks and the one that most correlates with their strengths. You've absolutely heard the expression, there's a Starbucks around every corner in a city. While this talks about how great Starbucks' brand is, this is also a bit of a double-edged sword here. It is not good in the sense of Starbucks' growth and how they want to grow in the future. If they have too many stores, those stores are just pretty much eating up cash. Starbucks actually once overexpanded and they had to close some stores simply because those stores were not worth it. Am I hinting they should do that again? The next weakness of Starbucks' business is the store ownership structure. Now, this is going to be tied back into the unions and why they're under attack right now, but all of Starbucks' stores and restaurants are corporate owned. Unlike McDonald's. McDonald's are franchisees. This is just basically, a local family pays $250,000 to open a McDonald's. Not for Starbucks. All of Starbucks' stores are company and corporate owned. Now, this is a big issue because there's one main target, whereas with McDonald's, you're not going to see a crazy union case here simply because it's a family or somebody else that owns it. There's not one big target here. This is another reason Apple had a bunch of stores unionized as well. Starbucks also doesn't have the pleasure of getting reoccurring fees and royalties from the franchisee. Am I hinting they should potentially move to that business structure? Maybe. All I'm saying is that McDonald's is extremely saturated as well, but at least they're consistently getting those franchisee fees and royalties in the form of cash flow. Starbucks does not have that. Another giant weakness of Starbucks' business is their pricing power utilization, which I just mentioned. They've kind of maxed it out right now. The pricing power is one of the biggest strengths of their business, where in case, let's say inflation, you can't predict these things. What if inflation goes to absolute shit the next few years? Starbucks can't hike prices another 20 or 30% like they did recently. They've already maxed it out. Right now, in 2025, that is the current weakness of Starbucks' business, the pricing power utilization. They can't use it anymore. Starbucks also has a giant reliance on some certain economies for future growth. China, India, hey, even Africa in the future. If anything goes wrong with these markets, as you've seen the last 5 years with China, if anything goes wrong with those countries, economies, or whatever, Starbucks is essentially screwed. The big trade-off here, though, is that there's massive potential for growth in these economies, and that's where a lot of people are expecting returns from in the future. If you're uncomfortable with investing in these economies, Starbucks is not the company for you. Starbucks and other corporations that are giant and have huge influence and brand power are also constantly attacked from political organizations, even though they have nothing to do with these situations, whatever. Right now, big restaurants like Starbucks and McDonald's are just basically being targeted because they're giant corporations. That's all the argument really is. This does have an impact on the stock price during certain times. I think that's really the best time to kind of scoop up some shares if you're looking to get in. To sum up the Palestine thing with Starbucks really quick, essentially a local store just said that we stand with Palestine. Starbucks is all corporate-owned stores, as I mentioned. They can't have one of those stores saying that, so they removed that sign, and essentially now the Palestinians are attacking Starbucks, saying that Starbucks is pro-genocide, all that stuff. Truth is, here Starbucks is just a very easy company to attack because of their size and scale. That's it. There's also currently a negative stigma surrounding the Starbucks brand just because of how expensive and discretionary it really is. A lot of people have even, commented on these videos saying, why would I buy a company that sells $5 cups of coffee? I think this is a negative thing currently surrounding Starbucks. It's just how expensive it is. There's absolutely some merit to it too as well. I've mentioned multiple times on the Discord, as me as a consumer, I'm going out, I want to get breakfast sometimes. Do I go to Starbucks, I get a coffee for $4.40, or do I go to Tim Hortons, I get a coffee, some donuts, and it's cheaper than that? You do the math. But Starbucks is actually over expensive right now, and I think they're getting away with it, and I don't think they can for a lot longer. Also, climate change has been a big issue long term when it comes to the coffee beans. Essentially, the hotter it gets, the more difficult it is to grow a coffee bean. This cost and more expensive coffee bean is going to be passed on to the consumer, and as I mentioned, Starbucks is barely getting away with price hikes right now. I don't think they can afford any more in the future. And lastly, overexpansion. One could absolutely make the argument right now that Starbucks is overexpanded now and in the past before. And I think that's kind of an issue that leads back to the saturation part. If you overexpand, it's a great way to lose money as a business. Alright, we're on to the fun part of the video. This is what would happen if today I was appointed the CEO. Brian Niccol, he decides he wants to go back to Chipotle. He's missing the burritos. They need a new CEO. I am the man for you. First thing I am doing if I am appointed Starbucks CEO is I am reducing prices. This is something that I've been hammering for the company if they need to get back to where they want to be. I think just reducing prices is the easiest way to get it. When you have times where same-store sales are declining year over year, you absolutely have something going wrong, and it's clearly the price hikes. I don't know why they've just been neglecting this. I think it's ridiculous, but straight up, their product is too expensive. It's showing in the data. People don't want to spend $4 or $5 on a cup of coffee. They will, but you can't keep getting away with it for much longer. Starbucks' brand, as I mentioned, has always been known to be a high quality and kind of discretionary product, but I think at this point it's just getting obnoxious. I think your brand is getting damaged right now because of how expensive your products are, and people are just straight up not going to your stores on a regular basis like they once were. I think if you start charging a premium but still reduced prices, I think people will gradually start coming back on a more frequent basis. I would start by making coffees around $3 on average. I think anything more than $3.80 is a bit ridiculous, even for a large. Coffee is probably the most average product that your ordinary customer is going to get. I think anything more than $3.75, $3.80 is kind of ridiculous. I would reduce prices on everything. Now, people are obviously going to wonder, hey, aren't they going to lose money up front on this? Aren't their margins going to go down? Yes, but you're looking to funnel your growth and earnings through more people coming in and the quantity of customers you have. You're also simultaneously simultaneously going to be growing the quality of your brand, being a more affordable restaurant to go to. More people are going to associate Starbucks with being, hey, it's a bit expensive, but I think it's reasonable. You get a good experience. It's only $2 or $3 for a coffee. It's a really nice store. I think it's worth it. People are not saying that about Starbucks right now. You go in, you pay $4 or $5 for a cup of coffee, and you leave. That's the experience you're getting right now. I was talking about the donuts and Tim Hortons as the example earlier and things like Dunkin', but Starbucks has a donut on their menu that's $3.25. This is the donut. It's 440 calories. This is over 2 times the price of a donut from a chain like Tim Hortons or Dunkin' Donuts, and even more. And very often with those chains, you could actually use the app and get a much better deal. I've had multiple instances where I go to Tim Hortons, I get a coffee and a donut for less than $4, which would be the cup of coffee from Starbucks. It's just getting ridiculous at this point, and I can't put my bias in front of it. I would do a full menu reduction on prices. I would obviously do this gradually. I would start by giving bigger discounts to people through the app, which is what I thought they were doing at the beginning of the year, but they are not doing that anymore, so But yeah, I think if you really want to make Starbucks a bit of a growth machine again, you have to reduce prices and just bet on the quantity of people coming in being more and kind of supplementing that loss. One of Starbucks' biggest assets and biggest advantages as a corporation is their app they have. Now, they were basically the inventor, along with Domino's, of the mobile app, and now you have other companies and other food chains that are kind of copying the idea, and one you could even say doing it better than Starbucks right now. Starbucks' app is great. They generate a lot of revenue through it throughout the year. I talked about it before, but they have a kind of a hidden bank effect, and essentially every time somebody loads some money into the app or they buy a gift card, Starbucks can use that money interest-free. It's a nice little hedge advantage that Starbucks has as a business. That's their advantage over smaller coffee shops. Smaller coffee shops just don't have that scale. They don't have that interest-free money that Starbucks has advantage to. It's not essentially free money for Starbucks, but they save a whole lot doing it. Starbucks can use that money interest-free for whatever they want. It's usually been fun growing the business, but that's kind of been an issue recently. But I think they're doing a solid job with the app right now, but I think they can do a better job of adding more value and giving people better offers. A company like Tim Hortons, as I mentioned, has a really good app. They offer you 5 or 6 reoccurring offers a week. They're actually pretty solid offers too. They're like 20% off any order, half off donut. On Tuesdays, they have something called Timbit Tuesdays where you can get a 10-pack of Timbits for only $1, which is a really solid deal. Starbucks is just straight up not doing this. I don't know why. I think Starbucks should integrate maybe 5 or 6 offers a week. It gives people more incentive to come to Starbucks every single day throughout the week and redeem one of their offers. Starbucks has a great advantage when it comes to data and logistics. If they can find times where people are not coming to their stores, have it be like half off coffee day or something like that. Just get people coming into your stores more. Starbucks doesn't offer any special offers throughout the week, rarely throughout the month, and it's extremely underwhelming. And while they do make a lot of money through the app right now, I think that the value that they offer to customers compared to other restaurants, as I mentioned, is lackluster. The third thing that I would start doing as Starbucks CEO is I would slowly start exploring converting company store ownership into franchisee models. Now, I looked this up and you can do this. It's referred to as conversion franchising. It's just the process from transitioning corporate-owned stores into franchisee models. I would slowly start doing this just to see if there's any effect on like the quality of your stores, how operations are ran, just to make sure that the Starbucks experience is still kind of maintained. Starbucks takes a lot of pride in having consistency throughout their stores and knowing what you're getting yourself into, and when you have a franchisee model, there could easily be one bad apple in the tree. Take a look at something like McDonald's. Like, I go to one McDonald's on one side of town, it's really nice, and I go to another, and I'm waiting 40 minutes for food. It's just inconsistent sometimes. They would have to find the right partners for this, but I think there's 2 major advantages that I can think of. One, Starbucks is going to have a new source of reoccurring revenue in the form of royalties and fees. McDonald's makes a bankload of money off of this, and often people call it a real estate company because they make money off the fees. Starbucks can have that kind of effect if they do this. Another giant benefit of switching towards a franchisee model is that the spoiled, entitled, bratty Gen Z unions will not be able to attack them anymore. Starbucks is simply vulnerable to this attack because of their business model and structure right now. I don't think the unions will be as giant of an issue as people are going to model it as going forward, but still the unions are going to hurt employee retention and employee satisfaction with Starbucks. Who doesn't want to make more money at their job? I don't blame any Starbucks employee or barista who's on board with the unions, even though they don't really know what they're fighting for, who wouldn't want to make more money. I blame the tools who are leading this movement, and I think that anybody following along with it is just kind of stupid and wants to make more money, but I can't really blame them. Alright, the next thing that I would be doing as Starbucks CEO is a complete revision of the food menu. Now, it's an often joke. Sometimes you hear people joke about Starbucks' food. Often it's overpriced. It looks very stale. It looks like it's been sitting there forever. The food is also criminally overpriced. You have a cake pop, which is like 90 calories, and it costs nearly $3, which is absolutely just heinous. Like, I am a Starbucks bull. I love the company, but that's just absolutely, like, criminal. Now, I'll be honest, I'm not completely familiar with the Starbucks food menu, but it just does not look appealing from an average customer standpoint. I know they have, like, the wraps, the bagels, the muffins. I don't know how popular they exactly are. I would consider keeping maybe 50 or 60% of your most popular and most demanded items. I would add 5 or 6 donuts to the menu. I think donuts are an easily reoccurring revenue source for them. People are addicted to them. They look really good, especially in the display case. They could also have those like tiny bite-sized donuts as well. Timbits for Tim Hortons. I just think there's a lot of potential for Starbucks, but there's absolutely a negative stigma, in my opinion, from the general population around Starbucks' food. I've had this conversation with multiple people in real life, and I've seen it on social media time and time again. The food is just not doing it. I think there's time for a revision. Maybe look at what a company like Crumble Cookie is doing right now. Try and find some sort of popular menu item that's going to get people coming into your stores. I just don't think Starbucks has that right now. Next, and this would absolutely have an effect on the stock price, and hear me out here, but I would close some underperforming stores. Now, this could range from 10 stores to 100 stores. I don't know. You have to look at what stores are underperforming. Starbucks has all the data. Any store that has been around for more than 3 or 4 years and is not adding to your business right now, I want it closed. We have enough data, we have enough logistics to see if it's adding to the business or not, and you have to obviously give the managers and stuff time. But if the store's not performing as it has been and you can't find a replacement for the manager or find a solution any of the problems at the stores, then the store will be closed. Also, if the store is just not safe, it's in a town that's not doing well. This happened a few years ago, actually, in 2022. They closed 16 stores because the stores were not safe. There was lots of crime in the stores. People were shooting up in the stores. It was not a good scene. Now, the stock would most likely probably fall 10% plus on the reaction to the news. I would then buy back shares. But closing stores, I think, gives Starbucks more room to grow. I think there's also a pressure right now on Starbucks to just keep opening these new stores just so it looks good on paper. But how much is it really adding to your business? You need to ask yourself that. Next, as Starbucks CEO, I would scale back our future growth in China. I would still remain invested. I would just potentially tamper those expectations. With that money that I would have invested into China, I would explore more markets like Africa, India, and Southeast Asian markets. Now, how much would I scale back from your China investment? I don't know. I just wouldn't rely on my complete growth for the next 5 years on it like they are kind of right now. There's giant potential in China, do not get me wrong. But to be completely honest, China has held them up for the last 5 years, whether one issue or another, whether it's their economy, C-19, or other issues. I think it's absolutely a bet, and as a corporation, I don't want to be betting on something. I would use those funds, I would take them away from China, not all of them, but I would take some funds away from China, explore some markets like Africa, India, Southeast Asia, some developing markets that I think are going to be accretive to your business going forward. Truth is, China's been holding your business through their hands in the last 5 years, and it's just getting annoying at this point. Once again, I mentioned if you are afraid of China, this is not the company for you. Starbucks has a lot of growth that is just completely reliant on China. It's been this way for the last 4 or 5 years. The company's been stagnant because of that. They've just kind of been held in the hands of China. It's on one issue or another that's completely lagged their earnings. It's getting really annoying at this point, and I just don't love relying on one market this much for a future and the future of a company. Alright, next, I would continue what they are doing when it comes to seasonal drinks, their store decorations, their food offerings, and more. I would ramp it up more, though. Something I really liked that their old CEO, Laxman Narasimhan, did is that he decorated the Starbucks stores like completely all red during Christmas. I think that's something that builds an emotional connection with the consumer, and that kind of covers the fact that you're charging $5 for a cup of coffee. I would do that with all your stores. If I were CEO, I'd want customers amped up to come to my store, no matter the time of year. I want people amped up that it's Christmas time and that their store is going to be decorated in all red. I want people hyped up that it's the fall season and that there's going to be more of a fall aesthetic to your stores. I think there's a lot of stuff you can do within building your stores, architecturally speaking, just to get people to come in more. I think people, when they actually go into the Starbucks, they just don't go through the drive-thru. They go in, they experience, they talk to the barista. I think that's going to where you're building your long-term customers. Next, we have automation, and I put AI with a question mark because automation, I think, is the more appropriate term to use here. Automation is what they're already pretty much investing in. This is just newer technology that makes it more easier, faster, convenient to make your drinks or food. That's basically what it is. Starbucks already has a pretty heavy investment into that. Self-ordering kiosks could be an interesting thing, but I'm almost hesitant to go to that just because of how much of Starbucks' brand and business model is built around interacting with barista, the barista being friendly. I think the automation comes into play more when the process of getting your drinks and food and getting that to you. I think that's where it's going to be more important than what it has been more important recently. I guess you can also use AI when it comes to your logistics and data. That could help out as well. I don't think that's really an issue for them right now. Next, one of my finer ideas, and Starbucks, feel free to reach out to me for a potential internship soon. I would consider starting a new store model for 21-year-olds and over. Now, what do you mean by that, Ryan? Are we turning Starbucks into a nightclub? Will there be dirty dancing from the baristas? No. But two of the most powerful drugs today are caffeine and alcohol. And alcohol, when you have that in you, you tend to spend a lot more money. Starbucks loves charging obnoxious prices for things, so why not add alcohol into the mix and you can get away with it much easier? Well, it turns out you can actually sell alcoholic coffee beverages. There's things like Irish coffee, espresso martinis, black Russians, a spiked latte. I don't know what a spiked latte is, but hey, I know for a damn fact that white women in their 20s and college girls will absolutely eat that up. They will spend all of their dad's money that they give them. That is absolutely a business model that I think is worth exploring for Starbucks. It's high margin written all over. This would get a new customer base when it comes to Gen Z people going into these Starbucks bar stores. I don't know what you can call them. I would put them in cities. I think the demand would be very high for them. Like, you can't tell me one of those things in New York would not be packed every single second. In the morning, hey, you could serve coffees. In the afternoon and nighttime, you could start serving those espresso martinis. It's a business model. In a time right now where Starbucks' business is extremely saturated, there's hard ways to find new growth. You have a store on every block. Why not innovate, make a new restaurant that has two of the most addictive substances and get people to loosen up and spend more money? I think it's an absolutely amazing idea. I would make these stores a mix between the reserve stores and the regular stores, somewhere absolutely in the middle ground. Alright, so these are some of the key takeaways from my reign as CEO. My first and most important thing I would do is try and rebuild the brand to what it once was, and I'd say 2015 to 2020. I think that's when Starbucks' brand was really at a peak. I want Starbucks not to be associated as an overpriced coffee company that you don't really get a good experience at. I want you to be able to go into a Starbucks, get a great experience, and not question the $3 or $4 when I'm CEO that you're going to be spending on your coffee. I don't want there to be any negative stigma around the company, whether it be for high prices, shitty food, or anything around those marks. Two, we need to innovate. I think Starbucks really is so saturated where it's going to be hard to find growth, and you have a lot of reliance on some certain markets, as I mentioned, like China. I think my last idea is a great idea. Innovate, try new stores, try different ideas. People will go there because of your brand. People will try it out. And lastly, you need to diversify your reliance on certain markets like China. You need to have 10 separate ideas that could absolutely blow up your business, not just one. For my closing thoughts on Starbucks right now, I think generally for the stock, I think it's overpriced. As I mentioned, I think there's a lot of reliance on certain markets. I don't think it's the most attractive opportunity in the stock market. Right now, I am holding on to my shares. If it goes back to 70, I'd likely buy more. I think Brian Niccol is a fine CEO. I'm confident he's going to do a good job going forward. I just think right now there's a lot of red flags in Starbucks that are kind of opening up to my eyes. For me personally, in my portfolio, it's a hold. I've also mentioned in the past, I think if the company ever got to $115, $120 per share, I would start trimming. Right now, it's the second largest position in my portfolio. A good amount of that is gained because I loaded up in the $70 range. And lastly, if you made it to this part of the video, I greatly appreciate it. This has been my most deep and most in-depth project on the channel. I took my time with this one. I did not want to rush it whatsoever. Comment Starbucks bar in the comment section if you're at this part of the video, just to let me know if you made it. It's also an amazing idea, don't deny it. Really, though, I appreciate it. If you want to support me in any way, all I ask, join the Discord link in the description. I love having conversations with you guys there. Smash the like button, share the video with a friend. That's honestly the best thing you guys could do. Alright, appreciate you all for watching. Smash the like button, subscribe, do dividend stocks, not drugs, and have a good one.